So if you've been with me since I started this channel, you already know that I'm not usually keen on showing the trades that I take. Sometimes it has a way of distracting from the teaching or the message that you'll be trying to put across. So that's why I don't try to. Sometimes I avoid just showing the trades. Some people interpret that as hiding stuff. Some people, then when you also show your trades, some people say you are showing off. Some people say a lot of things. So that's why I don't usually show the trades that I take, because I also want people to focus on what I'll be teaching or what I'll be sharing. But anyway, somebody asked me if I can use the same strategy that I've been showing you in the previous videos. You can watch those videos after watching this video. If you can use the same strategy to scalp volatility 75 index. So it's exactly what I did. I must admit it was a risky trade, but you can, if you watch the previous videos, you can clearly see why I took the trades that I've taken here. They are sales. They are at a minor level of resistance. If you just look left, you can clearly see what I'm talking about. Of course, the levels that I've marked with those horizontal lines will be the major levels, but they are in between minor levels. So sometimes you can just pick those and you can scalp, especially if you can see tails forming. This is 1 hour time frame. If you can see a tail forming, you can easily get into some trades. And the way that I trade is usually to go in big for the first few pips or points, and then after that I basically close most of those trades and just keep one trade open. I call it paying for the trade. So what you want to do is, when you spot an opportunity, you probably go in big. But this is scalping. This is scalping. It's very, 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 very risky. So don't expect to go in big with your whole account and then you want to hold it for 10 days. You might win, but it's risky. So what you want to do is, if you go big, what you want to do is to basically go in big and at some point just close the majority of your trades and leave a few that maybe you can trail. If anything goes wrong with those trades, then obviously the trades that you closed are enough to cover the loss from the ones that you have trailed. So that's how basically it happens. So some music. Let's watch how it turns out. I'm just going to scalp this. By the way, if you are new on this channel, please consider subscribing so that you do not miss future videos. If you learned one or two things in this video, or if I entertained you, just go ahead and like the video. You don't lose anything, just like the video. If you have any questions regarding trading volatility 75 index or VIX 75 synthetic index, leave them in the comment section below, and I'll try to do my best to answer those questions in my next videos. Otherwise, the broker that I use for this, the link is in the description box below again. Catch you in the next video. Music.